All right, so here we are, Wednesday, January 31st. So today we had one win and one loss on our earn to trade account. Ended up basically break even, just losing a few dollars from the closing balance of the prior day. So not too bad of a day considering it was FOMC, and man, was there a lot of volatility today, mostly in one direction. So my algos do tend to take fewer trades on days where there is a lot of volatility because we have to avoid those really wide swings, because when the market's that volatile, you'll be required to use a larger stop. If you lose a larger stop, of course, those stops will be hit, and that's going to blow up your account over time. So we try to be very careful on days where there's a lot of volatility. So despite that, we were able to sneak a couple of low risk trade opportunities in and ended up break even, which is just fine. Going to have red days, green days, and break even days. That is just fine. So let's take a look and see what we attempted to do today. So here we are taking trade number one. Now, I greatly prefer mean reversion trading strategies because on most days they tend to work better. Even though today was clearly a very trendy day, had a gap down right at market open, really big gap down here actually. So market very bearish, even in the overnight session leading up into our first trade. So we do attempt to get short, and even despite as bearish as the market is, we don't end up making money off of this. Now you might ask, what is the reason for the entry here? We were just shorting after a bullish candle. Why would we do that? There is a reason. There is a statistically probable reason. We have a fairly small stop and a fairly large target. Not going to go into the exact reason for the entry, but this trade doesn't work out, but I know that it is profitable over time. So not going to worry too much about exactly what the reason is, but we'll skip forward here and watch the stop get hit. So you all can experience schadenfreude, enjoy the pain from somebody else. It's not a big deal. Lose trades, that happens. You can see the trade did go in our favor a little bit there, but we do end up getting stopped out. I really try very hard when I'm in a trade not to watch, what's happening. Just want to check and make sure that we exit the market where we're supposed to, make sure that we don't have any errors where the stops end up leaving the chart or a market moves through without filling our stop. That's the only reason to be looking at it in the midst of a trade. So we go through that trade there. Market continues to go higher, so it's a good thing that we got out where we did. So we'll continue forward to the next trade, which, despite the fact that the market was so trendy, so bearish until FOMC meeting minutes, we still ended up making money only on a long trade today. So we can see ourselves come back from that loss. Now this one does come pretty darn close to our stop. So if we have a watch here, so our stop's down at 321.50. And let's see where we end up. I want to see exactly how far it came here. 324. Yeah, it looks like it got down 324. So about 2.5 points, or about 10 ticks away from that stop. I wonder if it does come any closer. I happened to be peeking in at that time and thought for sure we were going to get stopped out. This is why you have to let each trade play out. Either it's going to hit your stop or it's going to hit your target. There's no way to know which one it's going to hit first until it happens. You can't predict the future. You don't close trades early. You don't close trades at break even. There's no reason for doing that unless you have a particular strategy and you've back tested it and proven that exiting at break even at some point will save you from more losses than it will prevent you from winning. In my back tests, many strategies that I have tried, putting in a break-even stop, what ends up happening is the market goes in your favor, comes back, goes in your favor, comes back, goes to your target. If you put a break even stop earlier than, let's say, 1 or 2 ticks from your target, even then it's going to stop you out of more winners than it will losers. So that's why we don't do that. Today, the first trading setup that I took, that short trade, tried to go short here in this downtrend. I did not take that trade on my Apex accounts. So we ended up only taking the winning trade on the Apex accounts. It's just a newer strategy that I'm testing and have not put on that system yet. So fortunately on our Apex accounts, we are back. Our accounts were down at break even, so we're back in the positive after that. So had actually an okay day today. The strategy is 1-for-1, so we're actually just break even in total though. So that's it for today. Thursdays in the past have not been super great for me, so we'll see how it goes tomorrow, but not going to bring our bias into the market. We'll let the market tell us what we should do. So see y'all then.